Hello, everybody. Welcome back to the RationalInvestor.com Daily Brief. Full disclosure, Brian was a little tardy today. My apologies. I suppose if you're around TRI for the daily briefs, there are other daily briefs that sometimes start a little bit late. So now Brian's just joining the company. Anyway. So good morning, happy Friday, TGIF. Yeah, Friday the 13th. Well, I guess that makes sense, eh? Actually, Chris even mentioned that this morning. He kicked me out of bed at like 4:30 in the morning, my time, 4:45, I guess, somewhere in there. Do the opening range trades here today. I had two scratches and one loss on the opening range trade, so I was a little bitter. Yeah, I lost like 50, 60 bucks on the day. And afterwards said, you know what, I'm just going to go back and take a quick little nap. And unfortunately, had a phone call there a few minutes ago. Brian, where are you? So anyway, is what it is. Actually, I will say, though, that Chris had a fantastic opening range trade today. And I even asked him before we got going, if we have some time here, maybe we could have you walk through the good people. You guys get to know Chris a little bit better. I think he's turning into a fantastic trader. I don't know, Chris, do you have a screenshot or something that you could just walk the good people through the opening range trade in a couple minutes and just describe what it is that you did and why you did it and how you did it?
Sure. I can either share my screen or if you want to bring up our little trading plan, I think I've thrown some screenshots in there.
Okay, cool.
I can just
Before we're done here today, after I sort of go through sort of the overview, we'll pop on over and take a good look at Chris's gold trade. As well, Wednesdays and Fridays, we have a special guest on the show in our after hours show. Is that what we call it? I think that's what we call it. And today, as a special treat for all you YouTubers who maybe watch the Wednesday crypto show, maybe not. We have on Paul, our Crypto Traders Arena site. I don't know. I think he's the boss there. Anyway, he's a co-show host for our Wednesday crypto shows. Now he has graciously offered to come and talk a little bit about what he's seeing in the market for our sort of regular site members. So, Paul, are you on the call here today?
Hello, good morning for you, Brian.
Hey, well, I guess this is the exact opposite, eh?
Yeah, exactly.
So on the Wednesday show, I have him up at like 4:00 in the morning his time. So now he's going, now you know what it's like, Brian.
Exactly.
Anyway, so we should have a fun conversation with Paul in the after hours show. So lots to talk about. Again, my apologies, a little bit tardy here today, but it is Friday, so Friday the 13th as well. Maybe we'll chalk it up to that. So. Okay, let's do our little market overview report and get you at least up to speed with sort of what we're seeing at TRI in the market. So first things first, market breadth. As you can see, stock market's still pointing higher. And this is nothing more than just it's a broader market measure of the technical strength or weakness of the market. It's called market breadth. And it's not necessarily going to give you a buy or sell signal in itself. It's just going to simply tell you what is the broader market sentiment. Is it lifting or is it falling? And actually, it's doing a pretty darn good job of reporting sort of the direction of the market. And we had crypto actually, and I've often told you guys this, crypto often acts as a leading indicator And it actually turned back up there mid-December, mid-late December, and it's just been climbing. And this is getting a little bit insane right now. Keep in mind, these numbers can only go to 100. So the fast reading is at 100 and the slow's at 96.3. We're kind of running out of room here for the rally. And actually, the complementary signal to this, the histogram, which is nothing more than a sort of a rate of change. Look, you can see if we fast forward to the very last bar on here, you can see that our crypto is heavily overbought in the short term, also heavily overbought in the medium term. So this in itself is a very dangerous condition. And if anything, anybody who's been watching Bitcoin over the past few days, we were rather fortunate to get back in on the long side of our trade. We had a quick little, almost like a flash sell and then flash, get your ass right back into the trade signal there a few days ago. And so we've been long for quite a while on Bitcoin. I suppose we can show you that chart if I have it up in handy here. And it's getting a little bit long in the tooth. I mean, here is that Bitcoin chart. Holy moly. Just screaming straight up here. And of course, we have to stay long until that signal does roll over. We are, like I said, getting ridiculously overbought in this space. A little bit dangerous too, to be perfectly honest with you. I suppose you could argue, I think this is actually Julian's kind of commentary with you guys. It looks like they're hunting stops right now. Just big push higher here. I mean, I don't know whether we can jump all the way up to 21,000 at 2.618 off of this range. But we are, just literally going straight up here, which I suppose is an interesting anecdote for the January barometer. That's one of the reports that I like to follow here through the month of January. But gee whiz, crypto is just, and it's interesting. There was a gentleman, remember the other day, I don't know whether you remember this, Chris. There was a gentleman on Twitter who said that the crypto market cap will hit $7 trillion by the middle of July. And I was just like, wow, that's a bold prediction, considering it was like, 500 billion right now or something. So basically looking for like a 10x move in the next 4 or 5 months. Well, I tell you, if crypto just keeps moving this direction, maybe that happens. Probably a little late to come in on the long side of crypto here right now. I mean, that's my, old gnarly trader kind of approach. I don't really like to chase, and I suggest that you guys not chase. But I'll tell you, man, wow, what a big up move here. So, we got that in the background, but I tell you, the breadth indicator itself is that whether it be the indicator itself well above 80, the fact that we are up in the hundreds, the broader crypto market, keep in mind, this crypto universe includes things like, in this case, bear proxies. So like, the BTC down and Litecoin down and Ethereum down. So those guys are all not very happy right now, obviously. So it will never get to like plus 100. It's impossible for something like this to happen because there are a lot of these bear proxies. He's already rolling over here. But the crypto top 30, that's these kind of names. Very, very strong vote here. And actually, it's probably good that we have a guy like Paul on the call here today for the Afterparty show. Maybe we'll dig into this this market state here in detail. Also, too, somebody had mentioned, one of our site OGs mentioned that SEC laying charges against Genesis and Gemini for, what would you say? not following the securities rules, I guess, would probably be the best way to describe this. I see that somebody has said here, what's this saying? We've charged the Titanic with unregistered iceberg encounter in order to protect its passengers. Eric Voorhees announced, quote, we, the SEC, charged Genesis and Gemini for the unregistered offer and sale of crypto asset securities through Gemini Earn. So you definitely know that there's the market. Anybody who's played crypto for the past while knows that this is an insanely volatile space unto itself. So maybe it's we've had quite a bit of an ebb here. Maybe it's time for a bit of flow. I actually did, and this has been kind of a running joke with crypto for me lately, is I have been posting, although I don't know whether I have it on the screen here. Here we go. I've been posting, what harmonic pattern is this? And actually, we've been following this along for quite a while. But maybe before we jump into that, let's finish off the rest of the sort of the news and econ stuff before I circle back around to that. But we should probably take a look at this chart and dissect it. Maybe we'll do this with Paul in the after show. Tough to say. All right. So broader picture, you can see commodities catching a really nice bid here. They're moving up dramatically. Interestingly enough, if crude and the stock market is moving up, Bitcoin should move up. That's sort of our risk on proxy. So it looks like stuff is still moving up. I'm certainly not gonna touch the Bitcoin longs until we actually get a signal to get out of there. We might just see that the darn thing just embeds itself up top. Why did that happen? Primarily, you can see US dollar index. Actually, Julian was even talking about this yesterday. Kind of in a bit of a dangerous zone here. This is our old site OG, who I think has become quite popular within the crypto space himself. Colin, he really likes to label this 38.2 to 50% retracement area is, in this particular case, we had a big bull market. So we'd call this the pump chaser zone. So you're not really allowed to buy up here. But if this thing is still a bull, we should see it turn through here and turn back up. You can see where sort of my prognostication, or I guess what my prognostication was. But interestingly enough, US dollar just continually is just surging to lower lows here. One thing that concerned me a little bit about people getting too bearish of the US dollar here, and sort of thinking that it's a runaway bull, is we haven't even really heard from the Fed recently. And I just wonder whether a lot of the sort of bullish enthusiasm in the market, today we had things like the University of Michigan consumer sentiment reports come out. This, I think, was primarily the big fundamental driver. Consumers still feeling pretty optimistic, pretty big uptick there. Of course, we've talked lots about the energy market. Natural gas prices here in North America are actually back below what they were when they sort of started off this crazy big bull run. So consumers feeling pretty good. Now, this is the interesting caveat is Michigan inflation expectations. And this is probably the reason why, if the stock market is going to rally and commodity prices are going to rally, it's this, the fact that, inflation expectations here ticking down. And then 5-year expectations, kind of flatlining, but around 3%. Remember, the Fed would ideally like this around 2%. And if you think about it in simplest terms, the way the banksters work, of course, is that they make money lending money. That's really primarily the way that they make money. And they can actually create that lending out of thin air, which, of course, is highly suspect economics, but sure works well for the banksters. But that whole business model starts to break down if inflation rates are just too high. So the banksters would like a little bit of inflation, but just not too much inflation. Of course, we got not or too much inflation here over the past little while, and they've been like, whoa, 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 slow down, slow down. So, I went to dinner last night, and literally I had a glass of water and the basic burger on this restaurant's menu. Basically nothing. And I mean, it was an okay burger. It wasn't really great. Bill was $21 for a burger and a glass of water. So it's pretty pathetic. So the inflation problems, they have jacked us up, Klaus's great reset, that whole thing. But what they would like now is for us to get used to now that burger is $20. And they would ideally like now that burger just sit there at that $20 level for the next few years. That would be ideal scenario. The issue that bothers me, and we kind of talked about this a bit. I don't know whether I can do this quickly, but we'll see how I do here. And actually, I think it was the CPI. Maybe I can even put the CPI in here. The concern that I have is that keep in mind, I think on balance, everything is basically going according to plan. Klaus's great reset bullshit, all that. And if we look, I believe that these money cycles move basically in 80-year cycles. So if you look back 80 years ago, what did they do? And notice early 1940s, of course, they had the excuse of the Second World War to blame. And what's interesting is through almost all of my early childhood, you see debt to GDP numbers in the 1940s went absolutely insane. So this was the Second World War. Debt to GDP, and it was always that, well, we had to fight the Nazis and we had to fight fascism. That's why this went crazy. When in reality, I think what happens here is they go and blow up the financial system once every 80 years, and then they have to sort of reset the financial system. Might even have to actually move to a whole new currency. I mean, that could very easily be the case before this is all said and done. You might make the argument coming out the backside of the Great Depression that that was the sort of the what do they call it, the Bretton Woods Agreement. Was that generation's great reset. What scares me here is I think that this is what we just went through. And of course, government statistics nowadays, highly, highly manipulated. So they don't actually tell us the real inflation numbers. I distinctly get the impression that they're probably about half of what reality is. So, in a way they can say, oh, there's no hyperinflation. Look at the government statistics, right? But can you actually believe the government statistics? That's another conversation. Notice, through here, of course, they sort of gotten, we got to get this thing under control and raise short-term interest rates. And then you can see kind of like what we're seeing now, the inflation rates are starting to come back down to earth. And, probably at this point they'd said, well, man, we've gotten in front of this thing. You notice that at one point, the CPI actually got down to 0 there. And then notice 45, we're relatively calm. And of course, our current sort of crypto cycle, I'm already now starting to hear people say that the turn is in and that we're now starting a new 4-year bull market. So we do kind of anticipate that crypto market should rally into the end of 45, beginning of 46. And notice as we move through 45, things are relatively calm, and then they start to tick back up. And, the highest high through this whole data set is about 2.84. Notice we're like 2.5, 1.69, 2.8, 3.37, and then all hell breaks loose. 3.35, 3.31, 9.39, 11, 12, 14, 17, 18, 19. Oh boy. And it's interesting because we do have people on the site who have warned us that this is actually the year that we have to be most concerned about this decade, 2027. So if anything, we're in a nice little pocket, a nice little window. Yes, they've gotten in front of this inflation problem. The issue here, of course, is that the Fed has gone and raised rates dramatically. But if you have the stock market starting to boom higher and commodity prices all start to firm up, well, the Fed's going to be like, well, I guess we got to keep raising interest rates. So I don't know. If anything, this almost looks like it's too far, too fast in one direction. And all we're doing right now is just hitting that 50% level. My hunch is there's going to have to be a little bit of a fight in here. But as it stands right now, I think you can basically draw from this that capital, if it's flowing out of the US dollar index, that means it's flowing into the other fiat currency proxies. Japanese yen. It's been going up like gangbusters of late. So a lot of money's pouring back into Japan. Also, too, China's reopening and all that kind of stuff. So in a weird sort of way, there's a lot of Chinese investment there's a lot of Japanese investment in China. And you might argue that it's difficult for us in the West to trust the Chinese legal system. So a lot of people use Japan and Australia as sort of Asian proxies. Also, too, it looks like capital's flowing back into the euro. And I don't know whether the commodity currencies themselves are firm. It's firm-ish. You can see Canadian dollar, Australian dollar, Swiss franc. They've all got these bottoms working, so capital's flowing back into there. So just remember that if the US dollar index is heading down, then that means that all these international currencies are actually heading up. And why would they be doing that? Well, if the scuttlebutt here, especially things like University of Michigan numbers, if it's perceived that the inflation issue has been brought under control, then that will mean that the U.S. Federal Reserve will maybe lighten up on interest rate increases, and then that means there's no sort of further impetus to buy U.S. Treasuries or U.S. T-bills, let's say, Fed funds, those kind of things. And capital will find other venues that are maybe paying competitive rates. So we'll see how it goes. It's, ebb and flow, lots of moving parts here. I suppose also too, within the report earlier on this morning, we did have import prices in the States were expected to be falling, but they actually rose a little bit. And export prices actually were expected to fall quite a bit, and they fell quite a bit more than expected. So kind of a mixed messages out of the Econs first thing this morning. Other than that, once we get through the University of Michigan numbers, which I think are sort of driving the market from a macroeconomic standpoint, once those sort of trends were established on the get-go this morning, I think you can make the argument, like here is the crude oil market. I think you can make the argument the market did bottom here this morning. And so with that sort of like, well, the consumers don't think inflation's that bad of a problem and import export prices are agreeing. So up go crude oil prices, which of course, if you thought there was an inflation problem before, well, let's just bid crude oil prices back up and we will get that inflation problem back. And then on the gold market, same sort of thing. And as I said, Chris caught an absolutely fantastic opening range trade here. Congratulations, Chris. Way to go. And same sort of thing. If there isn't an inflation problem, all right, well, maybe these prices ought to get back up so we get that inflation problem back. So gold market had a huge rally today. Stock market, I think, is probably caught a little bit in the earnings and a combination of, keep in mind the commodities, they're just trading off of purely like commodity fundamentals, whereas the stocks, of course, a big part of this is all about earnings and earnings engines. And if I'm not mistaken, the the economic headlines. So U.S. consumer sentiment beats forecast. I thought we did have here news that we've had some stocks moving higher on earnings and then some a bit soft as well too. I did notice that things like Tesla, you can see Tesla's still down. They're actually having to lower prices to try and hold on to market share. So a big proxy in the market right now. It's a bit soft, but you can see, do we get a nice inverted head and shoulders here, which sets a base, which starts a nice little rally there. Only time will tell. But if I understand correctly, and actually that from a sort of a map perspective, mixed bag. Some tech a little bit softer. Some consumer discretionary a little bit softer. Other consumer sort of related products a little bit firmer. Kind of a mixed bag. Not a runaway bull, not a runaway bear. Didn't actually check in with the day traders this morning, but I did notice this morning things like the tick. It's just basically sitting flatline plus 50. It's not really overly bullish or overly bearish. Up down volume. We started out of the gate sort of soft. If I'm not mistaken, I think the stock market actually, still down on the day there for the S&Ps. Dow's basically flat, down 9 points. Not really that big of a deal. So I get the feeling also too. Well, not the feeling, but we have options expiry. We have a big options expiry coming up next Friday. I suppose also too, there's probably a lot of people going Friday the 13th. You know what? I think I'm just going to take the day off. But if we look at today's options expiry, we'll come back to this in a moment. But if we just look at today's, and Julian, I think, is doing a very good job with sort of mapping this out yesterday in his report. You can see puts, this is what institutions primarily write most of the puts. So where is the heaviest open interest for them? 390 and 388 here just on the week. So sitting up here at 395, they got a lot of wiggle room, right? 396.05 down a point here. They actually could absorb some selling here and they'll be perfectly fine, right? They would ideally like the market to be above 390, 388, and they do well. Notice there is a pretty big chunk here up at 395 and 394. So it would make sense. It's sitting at 396. If they can get the market to close out above that 396, look at the open interest above that level. I tell you, this works really well to give you an idea where Wall Street would like the market to go out. And I'd say probably 7 or 8 times out of 10, it usually does go out where they make a whole bunch of money. You might even find that they bid the market up above this 397. But if they can close the market out around this 396, then basically this is what they're on the hook for. These options up here or, down here, and all of these options, especially this 26 and the 24, they all expire worthless. Retail does a bit of options writing. So from the call perspective, if anything, Wall Street probably doesn't want to have to actually go and buy stock. And if the market goes out above the call strike price, then the calls actually have intrinsic value and they will be auto exercised. So it is interesting. You can see 400 way up top here. There's the heaviest open interest. And that would imply 400 above that actually there'll be a lot of business being done. Actually, that's a pretty big number for a weekly options expiry. 395, 396, you can see they're not on the hook for much up here. And that makes sense. Very typical. And really just think of this as, where would Wall Street make the most money? And they usually make the most money taking the calls out below where all this heavy open interest is, and then above where all this heavy open interest is. Think of it just as sort of a flip side. So point of the matter here is, ironically enough, just even where the market is right now, I think they do fairly well. Now, what I would say to that is that we do have a fairly large, this is like what's called a LEAP option, long-term equity asset participation securities. Oh, there's a mouthful. The January, third Friday of January, this is these big institutional, they're like yearly options. So if you go down like on a list, if you're looking at this, you'll notice, here we go 2023, then you go 2024. You can see there's only 3 series here now. 2025, there's only 3 series. You notice 2025, January 17th, 2023, 2024 here, January 19th. These are the big sort of, mutual funds, pension funds, the big hedge funds. They use these LEAP options, and you'll notice that the open interest numbers are way higher. So you can see the big heavy open interest on the call side, 400 again, 83,000. That's a pretty big number. 390, you can see that's probably a pretty big level that we want to keep an eye on there. 82,000. Remember, we said that institutions write the puts, so they would, if they want to hit a home run, notice again, interesting how up at 400, there's that 52,000. That's a pretty big number. But you can see even where we are right now, 65,000, and they hit their monster home run if we're above above 390, 112,000 contracts. I mean, that is a lot of money. I won't do the math here, but maybe we'll look at it in the after show. That's quite a bit of money, and my hunch is they do not want this market to go out below this 390 area. So what that basically means is over the next week or two, the S&P 500 is probably parked right up top here. In fact, actually, long-time site participants, this is just like a 1-minute chart, but long-time site, actually, I already have that on the screen here. Long-time site participants will probably know, and people who sort of follow me, that I'll probably be thinking that this is maybe a bot setup, right? So you got 1 low, 2 lows, 3 lows. It's looking fairly body. And then we project that up there. And then we will go like bot trade. So there is the bot entry level. Interesting how cute little head and shoulders top. Then they put in a little bottom. This, I think, is a very important 395 and a quarter. What a surprise. That's a pretty important level. I doubt that they take the market, but much below that. And, heading into next week, I wouldn't be surprised if they take this thing all the way up top here. So, that's actually what I would be thinking for the rest of today's session and through early next week. So point of the matter here is, look at gold up $21, just flying here. And actually I had an interesting, like I said, dinner with another gentleman. We talked gold stocks last night, and I have been putting out tweets, believe it or not, and I guess it does make sense in conjunction with a nice big fat Bitcoin rally here. One of the areas of the market that I really like, and I'm not really a gold bug by trade, but this is Newmont Mining, the biggest gold stock in the world. This is late 70s, early 80s. And of course, I showed you that inflation comparison from the 1940s, because I think that's basically the similar cycle. So you can see through this is the early 80s. Mr. Reagan, ironically enough, he came to Washington saying, I don't think we should be running deficits, and I think we should be running balanced budgets. Then pow, pow, pow. The banksters all take a whack at him, and all of a sudden Mr. Reagan's like, oh, you want to spend money? Spend all the money you want. I don't give a fuck, right? And we had Star Wars and all the crazy ass U.S. government spending, and of course that bankrupted the Soviet Union. Do you see a little bit of similarities here? I wouldn't be surprised if they are in like literally a money printing spending competition, with good old Vladdy there. And I noticed that they are literally matching the entire Russian military budget. They've basically matched the amount of money that Russia can throw at Ukraine with funding for Ukraine. Poor old Ukraine, they don't even realize they're basically mortgaging the rest of their future, their kids' future, their grandkids' future. I mean, the Rothschilds might as well just take delivery of the country of Ukraine, because when if either Russia wins and they control Ukraine, or Ukraine holds on and the Rothschilds control Ukraine. So take your pick, Ukraine. What future would you rather choose? I suppose, and I was joking again with this gentleman last night, that maybe having a bankster as your master is better than having an outright despot dictator who's just, if he doesn't like you, he might just murder you. Anyway, crazy humans. So, exactly. Well said. It's 9:51. Oh yeah, I guess it is. That is about a half hour, eh? So Chris keeping me honest. Thank you. Appreciate that. So I think we covered the news. Obviously, the big news is the University of Michigan. I guess that's like Econ news. University of Michigan consumer sentiment numbers came out, and I think that they've basically the biggest concern I think that the banksters have is that the public perceives that inflation's out of control. And actually, this gentleman that I had a dinner with last night, again, great, I've made 3 or 4 references to this. He was saying that back in the 1970s, he remembered distinctly he would get his paycheck and they would go and spend it as fast as possible. So that because they were worried that, by time, if they saved any money at all, that prices would be higher next week and he wouldn't be able to buy whatever he wanted to buy. So the Fed's hell-bent on breaking that, and hopefully that is the case, that we aren't back in that scenario. The only problem here, though, is that they've raised rates so much that I think that there will be sort of a cooling down period that's probably sort of like this. And then once that cooling down period's sort of been gone through, we're comfortably into this new sort of generation. We're probably going to find that the economies of the world are pretty weak. And then we have to do a whole bunch more money printing to try and keep the economies afloat. Right now, economies are still relatively strong. So put it all together, I wouldn't be surprised if the gold market actually enjoys a pretty darn good decade here through the 20s, just like it did through the 80s. Okay, so the point of the matter here is market's fairly strong into that Leaps options expiring next week. Crypto, I think actually as a leading indicator, it's actually doing its job. I don't, we were picking apart levels and, Julian's liquidity hunt, I even put a tweet out to the effect that I do like the idea that they're just simply going after weak hands now, and each of these levels represents a stop out level. Do we have some sort of insane blow off top, or can we actually get a period where maybe we can just get what ideally should happen here for Bitcoin, and this is good old Brian's bot setup, is we should have like a period of consolidation to set the next leg up. It just going straight up like this actually that's not sustainable over time. You can see when it goes straight up like that, sometimes we actually have to come crashing back down the other side. And now I suppose we'll dig into this into the after show with Paul. If we have to do that, then is it because of SEC stuff that's coming down the pike? It might be a little overdue for a bit of a consolidation here. That wouldn't surprise me. So having said that, I was certainly not going to go buy any crypto here, but I would like to see a bit of a consolidation. And, if we get any kind of weakness, I might even hop off the longs that we picked up just based off of the algo signals. So Here's sort of your market summary for you. Do we want to jump into that gold trade now, or do we want to wait for the after? Why don't we do that in the after show? It'll give people incentive. If you want to come and learn about opening range trades in the futures pits, well, come and join us for the after show. I suppose the only other thing to mention is new school term just starting now. So I think that the promotion goes on through the weekend, but that window for registering for the new, I guess what we'll call it, the winter Q1 term. This is coming to actually here we are. So you can see term starts January 14th. So that window is closing. If you want to take advantage of these low prices, I suppose with this crazy inflation, who knows where the hell the prices are going to go to in the near future. I think that we'll probably keep them relatively stable, but I can't, no guarantees. But the point being, if you want to get your act together, get your together from my tweets and comments on Wednesday's show, you better get moving on this. So, all right. Anything else I was supposed to mention here today, Chris, or shall we leave it at that?
I was going to mention the school term as well, and other than that, I think we're good.
Okay, so why don't we leave it at that? We'll pop on over to the after show. My apologies, a little bit late here today. But I think on balance, we gave you a half decent report. Be careful, okay? Don't chase. Don't get sucked into, oh, it's a whole new paradigm, that kind of thing. Just trade your setups. Of course, Paul will probably tell us exactly the same thing in the after show. But maybe consider popping on over and joining Paul and I and Chris in the after show for a bit further conversation here on Friday. All right, have yourselves a great day. PMA for the win. All the best. Way to go, Bitcoin. Looks like we got off a nice big fat win here on our most recent trade. So I'm super stoked. PMA for the win. All the best. The only thing left for Brian to say is bye for now.